10:30 a.m. UAE time, and we have Brent crude oil opening in Asia this morning, a little bit down again in that ping pong up and down from 80 to 85, that sticky range, now trading 83.05. Down a sizable 1% this morning. For whatever particular reasons, things are a little bit bearish today, a little bit bullish tomorrow, or a little whatever. But nonetheless, it's a week dominated by geopolitics as we see President Biden landing in Kiev yesterday, while the foreign minister, the Chinese foreign minister, arrived in Moscow. One is tempted to ask the question: is this the beginning of the end of this war, or is it the end of the beginning of this war as we come up to the first anniversary on Friday? That's my question this morning. Narendra Taneja, India's leading energy expert. What are your thoughts as you look from India's perspective with the sort of what appears to be nearly a growing sense that this is as they say in American football, the pep rally before the big game begins?
Well, I think to me it's the new normal now, in the sense that I don't see any sign of their war over Ukraine coming to an end anytime soon. It looks more like between Russia and the United States, and less Russia and only Ukraine. I mean, of course, the United States is leading, but the entire West, NATO, and many other countries around the world, they are with the US, they are with the West. And at the same time, we have seen statement by Chinese, top envoy at the Munich Security Conference. If you read between the lines, he was also making it very clear that, look, they want to see the end of it, but at the same time, it's the United States, which basically, according to him, is playing his own kind of geopolitical, game. But my sense is that, the global economy, global energy markets, they have by now more or less, kind of reconciled. They've adjusted to it. And you can see that in terms of prices of oil and gas and coal and even uranium and so on and so forth. So my sense is that, it has been by market, it has been localized. It's more between Russia and Ukraine and Western Europe, including the US. And at the same time, I think there is absolutely no serious effort being made by any party, including the UN Secretary General, to bring these parties together or to bring them on the table, or at least to get the ceasefire declared for 1 year. If you get ceasefire for 1 year and help temperatures to come down so that they can sit across the table and try to build a new way forward. But nobody seems to be interested in that. I think the West is arming Ukraine, and Russia is doing what Russia is doing. What Russia did was absolutely, stupid and barbaric, no doubt about it, and should not be accepted. But at the same time, it's high time that, players like, who enjoy good credibility, to at least ask for ceasefire, because ceasefire is going to create. So it's the new normal. This will go on. But when it comes to the energy, you have seen that the Western Europe, America, they took the lead and they weaponized oil, imposed all the sanctions. Where are the sanctions now? There are no sanctions. I mean, they are, of course, on paper.
Certainly no sanctions in India, that's for sure. Rafiq Latta, senior correspondent, Energy Intelligence. Narendra makes a point there. This is a local war. It's kind of got a few people involved, but it doesn't. But on a global level, this has a massive impact on the flow of energy, including, as just said there, into India. We've got products and barrels moving in every direction they've never moved in before. And yet the oil markets are relatively undisturbed by this. Your thoughts as we come to the first anniversary of this war and the new energy flows, permanent or temporary still?
One would say long term, there has to be a readjustment. Nevertheless, I cannot see Russia reclaiming its former energy prominence, certainly hydrocarbon prominence. It will not be the supplier it was to Europe. That's for sure. There's very few things I'd put my mortgage on, but that would be one of them. We're certainly seeing a big shake-up, and it's going to last for some time. And certain elements of it, there will be more Russian crude in Asia Pac. And for the moment, that doesn't seem to be bothering the big Gulf producers. They're keeping their sales, with the exception of Iraq, to India. They're keeping their sales, certainly to China. They actually went up a little bit last year, but they're keeping their sales solid. But then we got to ask, what happens with the Chinese energy transition? So I think really, you're right in pointing out it's spookily stable, the oil price, when you consider what's been going on. But I think it's a question of boom, 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 boom being hit from either sides, and that's what's keeping this apparent robustness, rather than any sort of inherent stability. I think OPEC is probably smart in its present policy of sort of going on mute mode, and sort of stepping back from overt interference unless it sees a big swing one way or another. So that's certainly going to keep things in check, or certainly range bound. I don't see them doing anything unless there's a big move one way or another. So in short, quite a lot is going to be changing, but I do see some form of readjustment when you do get when the dust settles.
Meanwhile, Matthew Wright, senior freight analyst at Kepler, it seems all the drama is on the water between tanker rates going through the roof, the dark fleet, the not dark fleet, and now we have the Baltic Dry Index, which is viewed in financial circles as an important indicator of global economic health, has fallen quite dramatically down to 530 at the end of last week. Where do you see, what is the tanker markets first telling us about this current crisis, if indeed there is one on the supply side?
So starting with the dry index, so on the dry side, yes, it's kind of it's a bit of a unique situation in that it's almost entirely China dominated, and the markets, while the dry index is down, it's a little bit skewed because of the way that's assessed. It sort of over represents trade into China, you could argue. And it's also assessed on vessels that are not the most fuel efficient. And so actually rates are slightly better than that. If you look at their equities, so equities of shipping stocks, they're sort of doing better. They're sort of diverging from the BDI, which suggests the market knows that China's on its way back.
But container rates are still quite low. If anything, they're even below pre-COVID levels now. Under $1,000 on some of the big routes.
Yeah. So on the container side, we've got a different story entirely. Definitely more about the weak economic outlook. I think that's going to start bottoming out as well. We had a huge stock build in terms of vessel supply. So there's a lot of vessels kicking around, and compared with that big drop off we saw post pandemic. Turning to tankers is a bit more of a dynamic one at the moment. Obviously, we had huge rates at the end of last year, and they crashed into January. They're now picking back up, and on the VLCCs, we're definitely seeing a much more steady improvement. Some really interesting developments going on that side. We saw a record high in terms of US crude on VLCCs going into Europe last month. Where VLCC rates still have a way to go, and a short haul route across the Atlantic is not going to be the main driver there. But then we saw China double its intake of Urals last month as well, and a big part of exports to China, I should say, a lot of that isn't actually going to arrive until March. But a part of that is the increase in ship to ship off Spain onto VLCCs, which is heading across to China. So we're going to see a big lug of Urals arrive in China over the next 2 months. Still not as high as some of the volumes that they imported last year, and obviously not a drop on what India is taking. We're expecting exports to India could reach 1.9 million barrels a day of Russian crude this basis in February, which would be a new record high. So Russia's really pinning its colors to the Indian master.
So you don't believe Narendra when he says he wants an end to this war, right? That's the joke, Narendra. But I wanted, Narendra, to get your views on what kind of a game changer it would be if China was to overtly join this war in a sort of support on a military level. The American government is now warning that, basically letting it be known, their intelligence is telling them that China is about to sort of cross a fairly significant line of support for Russia. What would that mean from India and the perspective India has on this conflict in Russia's invasion of Ukraine?
Well, first of all, in my earlier comment, what I said, I'm a neutral observer. My observation was absolutely unsentimental. I'm not taking sides.
No, I know.
I'm just looking at I'm a professional, so I'm just looking at it and sharing my perspectives without being sentimental or emotional about it, which many of you are in the Western part of the world. I'm taking more like a professional. So now you see that's the reality. The fact is that I said that I've read the China statements between the lines very carefully, and including statements at the Munich Security Conference by various leaders, including the Western leaders and also President Zelensky and the Chinese top diplomats, so on and so forth. But my sense is that China is a smart country. I don't think they would. My sense is they would not like to get involved in the Ukrainian war in this kind of no-win situation. And at the same time, China is buying time. They need at least another 15 years to get to where they want to get to, being a kind of equal to the United States militarily and economically. I think so. My sense is that China's focus is on Taiwan and South China Sea. I don't really see that they're going to, beyond a point, going to do anything. And in India, for instance, India is also neutral, contrary to what some people might think. We are neutral. We are just buying oil from there just because it's pure economic. And let's not forget one thing. Had China and India, the second largest market and third largest market, they have stopped buying oil from Russia, crude oil today would have been at least $110 per barrel, Brent. And that would have created more problem for my American economy, for President Biden, and every single country which is, in Western part of the world and OECD. So thanks to India and China. They should be
that's
grateful
really
to India
why
and China.
the cap or the sanctions on Russia were not structured. They were structured to allow oil to keep flowing. That was the whole purpose.
But let me finish. That's you see, the point is when you first come out with sanctions without thinking through carefully, then you come out with G7 kind of cap. And those people who did that, either they don't understand how the oil market functions or they just ignored it. The fact is, two major things have happened. Thanks to India and China, that oil prices are low and Western economies are able to recover. Let's understand it. Second, also the other side of it, de-dollarization. Now, many countries have started using, for instance, Indian companies are using UAE's currency to pay to Russians. So it's the process of de-dollarization. It started from China and it's now basically, is spreading, is going viral.
Well, the reason they're using the dirham is because it's pegged to the dollar. But I want you to answer my question, Narendra. I come back to it. Yeah. How would India react if China does take this step? They're obviously very engaged in their support, whatever characterization you have of it, of Russia. If China was to take a step towards militarily supporting Russia, would that be in any way a game changer for India, like it would be for Europe and the United States?
As a doctrine, India never participates in these kind of wars, beyond our borders and shores. We never do that. That's part of India's
China. I'm talking
doctrine.
about China.
Well, China can do whatever China wants, but India is very clear on that. On this, India is neutral, and India's, India needs the West. India is very close to Western countries. We have a special relationship.
So if China joined Russia in a military war, India would stay agnostic.
India will stay where India is. Continue to buy oil from Russia if Russia can make sure the crude can be delivered at Indian ports, and they take care of the shipping part. And at the same time, India can find the ways to make payments for them. That's it. But beyond it, if China can do whatever, but as far as India is concerned, India's stand is very clear. India never historically, takes sides on such matters. And B, Western countries are very important for India. So is Japan. So is all the Quad countries, and so is actually even China. As long as you follow the international law, India will go strictly as per the international law, and India has made it very clear repeatedly. Our Prime Minister spoke in public in front of the cameras with the Russian president, saying, "Look, in these times, in these days, 2022." You don't fight war, you don't attack other countries. So that's India's stand very clear on that. Ukraine is a sovereign country. Ukraine's sovereignty is very, very important. That's why it's important that two countries, these warring countries, come to the table. Unfortunate part of the story is that no leader, no country is making effort to bring these two parties on the table. Question is why.
Rafiq, meanwhile, in Europe, obviously, this is also a very big week, given the anniversary of the invasion on the 24th of February, 2 or 3 days away. All in all, a bit like the oil markets, somewhat without wind or direction, Europe, despite everything over the last 12 months, finds itself on the first anniversary in a relatively decent place. The sort of Armageddon winter didn't happen. The collapse of currencies and so forth didn't happen. All things considered, is Europe now out of the worst case scenario, or does one need to be still vigilant to the possible outcomes here?
Okay, there's a difference from this winter that's just been. If we'd have had a nasty winter, we could have seen some real trouble. I think that extreme crisis point, maybe we've got over. They've built in some LNG. Clearly, it's not enough to cover Russian imports, but that's going to account for something. A lot's going to depend on the weather. But I don't think Russia is in as a stronger position as it was a few months ago. There's no doubt about that.
In what sense?
In the sense that Europe has and will by winter have in place a LNG. I think it's 22 million tons a year of LNG floating in LNG import capacity, which it didn't have before, and that's going to make a difference. That it'll be a year further on in the transition. What about the
momentum we've seen, Rafiq, around your neighborhood there in Cyprus? Some real activity, momentum on the East Med, given how high LNG and gas prices went last year. Now that has sort of come down quite dramatically, do you expect the momentum to continue in the development of the East Med, or will it, do you think, return to where it was and it's sort of being locked away in a box?
No one's saying it, but I think East Med matter. What counts a lot in the East Med are the Turkish elections, and I think Europe is going to view the prospect of a pipeline via Turkey from the East Med very differently if Erdogan does not get back in versus if he gets back in. I think that's key. That is key. And East Med is one of these. It's one of these areas that promises a lot, and really, in production it's delivering. There's been some fines, but actually development, it's been very messy, and there's some good reasons behind it. There's a few too many stakeholders, a few too many pebbles in the way, and somehow we're not getting the momentum to get decisions over the line in terms of like the really big Leviathan phase 2, the really big projects. One would hope, but they've been saying this for quite some time. End of the year. I think the Turkish elections are going to be interesting.
Well, certainly now with the tragic backdrop of the earthquake, with all the sort of ramifications that have come from that, it brings an extra dimension of what appeared initially to be a fairly straightforward re-election success for Erdogan now might be complicated. Matthew, if you might just speak a little bit to that point there, LNG, obviously with the massive new import capacity appetite in Europe for LNG, many regasification units being put in, particularly in Germany, there is a greater requirement for LNG tankers tankers to move this frozen liquid all over the place. Do we have the LNG tankers there? Are we going to see a crunch now with China reopening, and we will see another surge in LNG? What's your outlook there on the availability of the tankers for LNG and the pricing into this new year and potentially next winter?
Yeah, so you hit on the real key point there, which is China's reopening. And if China's appetite for LNG explodes, then there will be a crunch. So if you sort of cast our minds back to sort of winter 2021 before Russia invaded, we already were seeing quite high LNG freight rates. And we were in a situation at that time in which the market was balanced. If the netback for US cargoes favored Europe, there was enough capacity, and if anything, rates came down quite sharply. But as soon as the netback favored delivery into Asia, the fleet was very, very stretched, and there were not enough. There was a secondhand sale this year recently that was around the same price as a new build. I think it was the news on that was shared earlier. So there is expectation that LNG freight demand is going to rise. And looking ahead, so looking at the spot commodities netback projection for this year, at the moment it's still favored for April. It's still loading. It's favoring Northwest Europe, but the whole summer it's seesawing back and forth between Northwest Europe and Asia. And actually, at the moment, as it is based on forward prices from July through to December, it's favoring Northeast Asia, which is a complete change from all of last summer, which was obviously Northwest Europe was the incredibly high TTF price was ensuring that every incremental US cargo was going to come into Europe. So we're in it really, really depends on how much China swings back and ramps up LNG demand massively.
Let's go to the survey question, which is sort of where I started the conversation this morning. As President Joe Biden touched down in Ukraine yesterday to meet with President Zelensky, China's top diplomat was traveling in the opposite direction on his way to Russia. My question is this a signal at the beginning of the end of the war, that these major global figures, the two biggest powerful people, I mean, literally Biden and the most senior representative, President Xi, in the theater, as Narendra said, nobody's making an effort to solve this war. But are these two present an indication that we're at the beginning of the end of the war, that the biggest decision makers in the world are now saying, maybe going to take this to the end? Or is it signaling, no, this is just the end of the beginning? The first anniversary of this war, with all the tanks and heavy artillery and weaponry and the buildup of forces that we've seen in recent weeks and that are coming in the weeks ahead, is signaled that this is the end of the beginning of the war. We're simply in the early foothills of this war, as a lot of analogies of First World War type of conflict. Of course, that dragged on for 5 or 6 years. Bosnia, which is a more recent trauma in the region, dragged on for years. So the question is this the end of the beginning of the war? So welcome your Voots, and that we'll post that on social today. Narendra, we haven't talked regarding the development of Gautam Adani in India. At first, I thought this was sort of a nothing story, just a lot of drama. But it seems to have become something quite significant. I wonder, from your perspective, from inside the country, is it as significant as it sort of appears from the outside? How big a deal is this? I mean, particularly as it might relate to energy, given that Adani had such major commitments to green energy. What are your thoughts on the fallout of this event?
Well, I mean, his exposure is both in the conventional energy like LNG terminals and LPG terminals, and also new sources of energy, including, solar and hydrogen. But he's a big player in infrastructure, and he's basically in the brick and mortar business. So you can go touch it, and, if things don't work out, you will always find a buyer. So in the sense that, we have seen the reports and all that, but in India, since, we were kind of, practice Soviet-style socialism for almost 50, 60 years before we started opening up in 1991. So whenever there is a rise of a new group on the horizon, they have to go through this kind of scrutiny. And we saw that with Reliance in the 1990s and 1980s. We saw that with the Tatas in 50s and 60s. We saw that with another conglomerate called the Birla conglomerate also in the 70s. So I think, so now it's Adani's turn. Tomorrow it will be someone else, because we still have this resistance. Whenever, for instance, you have got an agenda, you're working hard, and you are willing to basically take risk and you grow fast, there are questions. But this is not to say that, some of the questions being raised in terms of not, fully, doing well in terms of compliances and all that. That's a story we don't know. There's for agencies to investigate. Central bank is investigating. Regulator of stock market they are investigating. So let's wait for the findings of these regulators, two important regulators in the country. But as far as the business is concerned, all the businesses that Adani Group is into, whether conventional energy or unconventional energy, these are brick and mortar projects. They're coming up, and if tomorrow Adani doesn't want to take them forward, there will be someone else. In the sense, because there are many international collaborators also participating. 65% funding has come from foreign bankers or foreign lenders. So it's kind of, it's a quite huge project. But I would just say these investigations are being done by these two regulators, Reserve Bank of India and SEBI, the regulator of stock market. But other allegations, I'm sure they are investigating. But as far as, these things are concerned, we in India know that if you are big, if you are growing as fast as Adani was, there would be questions, there would be scrutiny, there would be allegations. Some might be true, some might not be true, but you have to go through it, that because it's still India, majority of people in India, they is still kind of very socialistic the way they look at big business. If you are moving too fast, if you're growing too fast, they're suspicious, they have questions in their mind, and they think, oh, you must be doing something hanky-panky and so on and so forth. But that is not to say anything on that, because as I said, that's the regulator's job. I personally don't have any opinion on that. But what we need in India is we need to come out of the socialistic mindset, because in India we need at least 20 conglomerates of the size of at least $400 billion, because we have a big ambition as a nation. So I think the socialistic mindset should not become come in the way. But I'm not suggesting everybody is like that, but there are many. Luckily, young people, they are kind of more modern, they are more progressive, they want more Indian conglomerate, they are taking initiatives and so on and so forth.
But in the immediate sense of any impact on Indian refining, production, physical industrial activity, while the stock market price has been hit, the actual industrial activity remains the same, and there's no obvious thing to point at as a consequence of fallout of this.
No, not at all. Because you see, I mean, domestic investors or foreign investors, they're coming in looking at India's potential and what India has to offer in terms of, the economic reforms and so forth. Even after that, Adani, we have seen, for instance, India buying, planes from Boeing, about 500 planes, and another Indian company, private sector company, is buying 500 planes from Airbus.
But it may end up being a positive thing. I mean, in terms of accountability and transparency and all of these other things that give confidence to foreign investors, an event like this might, at the end of the day, be a confidence building exercise rather than confidence sapping. I just want to, Rafiq, touch quickly on the Jodi report that came out yesterday. Somewhat surprising data there. The surge in oil demand in December towards the end of the year, up by over 1 million barrels, bringing overall global demand above pre-COVID levels in December 2019. Your thoughts on that, and does it indicate that OPEC Plus will indeed have to increase supply sooner rather than later?
Okay, well, OPEC Plus have gone on record saying they're going to wait until they see real tangible evidence of a seismic shift before they take any action. Clearly, China is a big question here, and to the extent which it comes out of COVID and lifts those restrictions, and it kicks on in terms of economic activity. And I think that's to what. That's reflected in the December data, which I believe also showed a fall in production. I believe that's rebounded again in January. So I think that's just a blip. But
surprisingly, that kind of reporting and that kind of data didn't have much impact on the markets. As we said, oil prices falling this morning. That kind of demand data above pre-COVID
I think
levels.
it was baked in, wasn't it?
Baked in.
A certain amount of the China bounce back. But going forward, I mean, that's the key thing. And yeah, China comes back full time, then certainly I'm a bit wrong as to Europe's ability to stave off a crunch this winter. And Matthew's point is exactly spot on. China doesn't do so well, and but everyone, I don't see much movement from OPEC, and demand rises will be more modest. I don't see every month is going to be like December. I think that's
clearly
a freak month. It's going around a bit more than the price I'd have thought.
Yeah, I suppose the rise in China might be countered by the drop off in the OECD, where economic growth is weak. Let's get the survey result and give Matthew the last word this morning. Here we've got sort of 2-1 that this is only the end of the beginning of the war rather than the beginning of the end. Not a very reassuring outlook there. Matthew, in terms of the flows, as we started out our conversation this morning, all of the new direction of flows, obviously products move from the Middle East to Europe, crude and products moving from Europe to the Middle East and into Asia. Are we seeing adjustments in the freight rates, in the tanker rates, these new routes that didn't exist before? How are they being priced? How is that impacting the markets from the point of view of just unfamiliar pricing structures?
So there's two parts to it. There's you've got rates out of Russia, and you've kind of got the rest. But what happens around Russia affects everything anyway. If you've got a huge increase in the voyage distance from Russia, you need more vessels to do it, and then you're pulling those vessels out of other markets as well. So freight rates for crude from the Baltic to India it is for an Aframax is way above what normal Aframax rates are, but all Aframax vessels benefit. And then on the product side, so now we've had the EU product ban, we're now starting to see whether there's going to be a similar Russia effect there as we have seen on crude. And what's interesting is, okay, it's been less than a month. Our data at Kepler shows that over 40% of Russian refined products is staying in the Med and Black Sea. We're not seeing huge volumes going to West Africa and Brazil as we might have expected, which were going to be sort of potential big buyers. And as a result, so we're not, clean rates are lifting off the bottom where they were sort of for most of January, but we're not seeing a real explosion yet. But it's still far too early to draw too many conclusions about refined products flows.
Well, certainly one to keep an eye on as an indicator. We'll have to leave it there. Brent crude trading, as I said, down over 1% at $83.05 as we move through a very geopolitical week with President Biden in Poland today and the Foreign Minister of China in Moscow. Narendra Taneja, thank you so much. As always, great to have your insights. Rafiq Latta in Cyprus, really appreciate it. Matthew Wright in the UK, thank you so much. Have a great day, everybody. We're here every morning, 10:30 UAE time. All the best. Thank you.
Thanks.